What's up, you guys? My name is Daniel, and on this channel, we talk about personal finance with a focus in the stock market. And in today's video, we're going to be talking about this heavily requested stock that's just up over 50% within the past couple of weeks. So sit back, relax, and soak in all the information. So today's stock that we're going to be going over is CloudMD. And for those of you guys who are value investors, sorry, this is not a value investment. This is more of a speculative play, but I dug into the business and I'll be sharing what I found. And I'll be telling you later on whether I have a position in this company or not and what I plan to do in the future. So first, we're going to start off by looking at the stock charts. So we're going to look at the US stock charts, which this company is actually traded on the over-the-counter market. They also trade on the Canadian market on the TSX Venture, ticker symbol DOC. So if we look at the US stock, they actually have history since 2018, and it had some major volume in stock price appreciation starting July 27th, and it increased by a total of 75% from July 27th to a couple days ago. However, since then, it's actually dropped back down, and it's only a 51% increase. Like, only 51%. That's not too bad for a week. And we can see the stock has a low of 54 cents on the Canadian market and a high of 95 cents. Now that we're done with the stock chart, let's go over the business and what CloudMD does. Because as an investor, if you don't understand the business that you're investing in, then it's just a pure gamble. So essentially what CloudMD does is they're trying to become a key player in the healthcare industry. And the healthcare industry is massive, but how they're planning to do this is through telemedicine. And if you guys don't know what telemedicine is, it's basically connecting healthcare providers with patients through technology. And originally, telemedicine started off through the telephone. However, in this digital age, it's evolved such that people are connecting over video chat or just online messaging or text messaging. They have a 3-step business plan, which is all done through acquisition. The first step is to acquire medical clinics, then healthcare technology companies, and finally, pharmacy expertise. They've already completed parts of each step so far. However, the next thing for them to do is to create synergy between all 3 of these and scale. CloudMD was actually founded in 2013, so this company isn't new on the block, and they've had a couple years of operations, and their acquisitions really started in 2017 all the way up till now, 2020. Any history before 2017, I couldn't really find on the company. All I know is the company has been through a couple of name changes, and the management of the company has changed hands quite a few times. However, since 2017 when the company started picking up, the CEO has been the same. The CEO is SM Hamza, and he came to the company through an acquisition. He used to be the founder of HealthView, and once HealthView was acquired, he ended up becoming the CEO of the company. And later on, you don't want to miss this, but I'll be talking about management because management is key when running a business. They are the ones who make the big decisions, so we must know a bit more about them. But continuing on with the business, since then they have acquired 4 medical clinics. These are HealthView, a U.S. chronic care facility, a Mississauga Brampton clinic, and the South Surrey clinic. They've also acquired 2 pharmacies, a cloud-based EMR software company, and a mental health platform called Snap Clarity. Their latest acquisition, though, is one of the most exciting parts about this business to me. They acquired a U.S. chronic healthcare facility, and they didn't release the name of this facility. However, they gained 2 medical experts in the U.S., and these medical experts are Fred Rowe and Curtis Gibson. And both these men have 30 years of experience in the U.S. healthcare industry. Dr. Fred Rowe was also a founder of Healthcare Networks of America, and this network has over 15,000 physicians connected to it. So Dr. Fred Rowe is no small fish. He definitely knows his stuff. And having him and Curtis Gibson on their team for CloudMD, I see this as a positive thing for the US expansion, as these 2 men can leverage their connections in the US and bring CloudMD into the US market. And we all know the US market is 10 times larger than the Canadian market, and also the US healthcare market was $3.5 trillion in last year, and 90% of those dollars spent were on chronic healthcare. Now moving on to the product itself. So the other day when I was doing research on CloudMD, I decided to go into the Google Play Store and download their app. And, installing an app is very easy to do, and I was able to set myself up on their platform in the matter of minutes. If you guys watched my previous video on Well Health Technologies, you'll know how frustrated I am with my doctor. So it's near impossible to book an appointment with my doctor. I can't call him because he never picks up his phone. I actually have to drive to his office in order to book an appointment, and then come back 3 to 4 weeks later to have that appointment, only to find out he has 10 minutes for me, and all he does is ask me a few questions and writes me a prescription. Gee, thanks. Couldn't he have just done that on the spot? All I have to do with CloudMD's app is literally click a few buttons to book an appointment, then open the app to have my appointment and get my prescription right on the spot. And honestly, it's the same thing as going to a doctor's office unless they need to do some special checks. But for most things with a doctor, they ask you a few questions, you tell them how they feel, and they give you a diagnosis. Now let's turn over to management to see who's steering the ship. Their CEO and president are both doctors, which is a good sign because they're in the medical space. Doctors, they know the ins and outs of the traditional business and are well positioned to develop the next generation of care. The CEO has also had experience building out his own small network of clinics at HealthView, and these also definitely required some sort of capital raising, so he has experience raising capital as well. The CEO is paid around $60K per year, while the CFO and COO are paid $30K or less. Their compensation is mostly in the form of stock, which is only around $190,000 combined. So if we split this 3 ways, it's roughly around $60,000 per person. And I think this is good because it shows management is not trying to suck the cash out of the business. Rather, they are incentivized through stock-based compensation to keep their interest of shareholders in mind. And their total compensation is roughly, let's say, around $120,000, which is not astronomical. So in my books, for the management team, I think they're well positioned in terms of their experience and the backgrounds, as well as the way that they pay themselves and compensate themselves keeps the investor in mind. Now turning over to the financials. We saw that in the past year, the revenues have been growing 200 to 400%, and this is actually through the past 3 quarters, while expenses grew by 30 to 160%. So we can see here that the revenues have been far outpacing the expenses and shows that this company is continuing to improve their margins. The net losses have been around $1 million to $1.6 million per quarter, which is fairly significant for a company with a market cap of $100 million. But this is understandable for a hyper-growth company. The CEO also mentioned in an interview that he expects revenue to hit $22 million at the end of 2020, which is based on growth of telemedicine, virtual care, and the SaaS business. And he also mentioned that the revenues have been accelerated by 3 to 5 years due to COVID-19. So the need for telemedicine right now is large because people feel uncomfortable going to their doctor's offices, let alone even leaving their house. And the last thing that you want to do as a sick patient is to enter a doctor's office, because in a doctor's office, a lot of sick people walk in and out of that place, and who knows what germs are on the doorknobs or just floating in the air. So as a patient, if you can get your diagnosis remotely, which most people can, then you would definitely prefer that, which is why I decided to review CloudMD in the first place, because telemedicine definitely is taking on shape as COVID continues to develop. As of March 31st, 2019, they have a current ratio of 1.23. This covers their near-term liabilities and also is enough for another quarter of operations. On June 2nd, though, they announced another round of financing which closed and it yielded them $13 million. So the company should be able to continue operating for at least a year off of this cash. And they do plan to grow aggressively through acquisition, and this is outlined in their MD&A. And we can see shortly after June 2nd, in July and August actually, they announced 3 other acquisitions. So this company is growing quick. So now we're going to turn over to my thoughts on the company. And because I reviewed Well Health Technologies, I'm just going to make a comparison between CloudMD and Well Health Technologies. So Well Health Technologies, they're a larger player in this space right now, and they have a lot more clinics and therefore a lot more physicians. However, they only started their telemedicine business in the month of March. Whereas CloudMD, they've been operating for a couple of years in the telemedicine industry, and their management team is also made up of experts who have actually done telemedicine themselves. I think because this market is so huge in Canada and also in the States, both these companies can thrive. And I think because both these companies are in the same space and we've seen how well Health Technologies has done, I expect CloudMD to follow suit in the near future. So you've seen Well Health Technologies appreciate from a price point of around $2 all the way to $4.70 or so today. And WEALTH Health Technology is currently sitting at a market cap of $400 million. Whereas CloudMD right now has a market cap of $100 million and sitting at around 90 cents per share. And they've appreciated by around 50%, but I think they can do even better. They also have other competitors in the States like Teladoc. And Teladoc right now I think is around an $8 billion company, so this is no small fish. Teladoc is probably one of the biggest leaders in the telemedicine industry. However, telemedicine is still in its infancy, and CloudMD still has a shot at gaining more market share and becoming a good competitor to Teladoc. One other thing that I noticed about CloudMD ever since searching them up on Google is that they have been advertising their stock on Facebook. And these ads usually push recent news that is happening to the company to generate investor hype. I've never really seen this from a company to run Facebook ads to advertise their business. However, this stock is small and they probably use unconventional methods to generate investor hype. So I'm not really sure what to think about it at this moment, but if you guys have any comments about this, leave it down below. I think it's one way for them to get noticed by the investing community, especially those who are investing in small cap stocks or even penny stocks. And because seeing their business model and how they're very similar to WEALTH Health Technologies, they're going to be raising a lot more financing in the coming years to be able to fund their acquisitions. So in order for CloudMD to be successful, what they want to do is boost their stock price so that they can offer follow-on rounds of financing and offer off less equity for a larger sum of money to complete their acquisitions. And this is ultimately how this company is going to run in the future. So I think buying into the company now presents quite a bit of risk because if they're not able to appreciate their stock price, they're going to keep diluting shareholders, and ultimately I think dilution is going to come to a point where nobody wants to buy their stock. However, if they're able to continue to appreciate their stock price, you're not only going to see stock price appreciation, you're also going to see a business where its revenues continue to grow through acquisition, their customer base continues to grow, and maybe one day they'll become so dominant or become one of the major players, such that it's very hard for the competitors to force CloudMD out of the market and go bankrupt. Their US expansion also gives CloudMD a lot more room to grow than just Canada. We know that they've expanded from BC to Ontario because of their recent acquisition of their Mississauga clinic. However, with their expansion over the borders, this opens them up to a lot more business opportunity, and it also opens them up to even more investors if they can get listed on the NYSE or NASDAQ. Another route which I can see for this company going forward is to get acquired. Because right now they're very small at $100 million in market cap, that a big company like Teladoc, who's worth $8 billion, can easily pay a premium for them, let's say $200 million, and buy out CloudMD. And if you're an investor today and they bought them out for $200 million, you would instantly see a 100% gain on your investment. I think this is possible for CloudMD. However, I don't think management has that sort of aspiration to become acquired because they're in the business of acquiring other businesses. And as doctors, I think they're trying to really push forward the industry of telemedicine than just make a quick buck off of their equity. So now it comes to the exciting part of this video where I talk about what I'm doing with CloudMD stock. So today I actually opened up a position in CloudMD. I bought it in my RSP account because I have a long-term horizon for my RSP account. And although you guys might think this is a risky play for the RSP account and you should be buying dividend stocks, however, I have about 40 years or so before I retire and can withdraw from this account. And I believe that CloudMD has a bright future ahead of it in terms of telemedicine and the way that they're run and also who they're run by. I believe in, and I think that I could see good stock price appreciation over the next 20 to 30 years. So I'm willing to put a small portion, roughly around 1 to 2% of my portfolio, into a more speculative company that could end up 10xing in the next 10 years or so. And for those of you guys who are looking at the stock charts, you'll notice that CloudMD ran up from 54 cents all the way up to 95 cents and back down to around 83 cents today. The thing is, right now, when I look at the valuation of CloudMD based off of a PS ratio, they're not too expensive. They're at around a forward PS ratio of 5. If revenues hit 22 million and their market cap currently is 100 million, that gives you a PS ratio of 5, and that's very small for any sort of growth company. I expect this company to have a PS ratio of around 10, which we could see a stock price appreciation of around 100% within the coming year. But for me, I can see that, after this cool off, they're probably going to see some consolidation somewhere in between. And 70 to 75 cents seems like a pretty sweet spot. But it might not stay there for very long, so I'll probably take action fairly quickly and average in after that. And if the stock drops even more, then that's great for me because I can continue to build up my position. However, if it quickly bounces off the 75-cent level, then I'll be averaging into my position just like I am with WELL Health Technologies. If you guys enjoyed this video, please smash that thumbs up button, as well as if you enjoy this content, click that subscribe, the notification bell, and leave any comments down below if you have any questions about this company or have started opening up a position as well. Keep up the grind and have a great day.